Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully, all of you had a very good day today. And in today's markets, guys, well, we had another 2% day, very volatile one. This one to the upside, in contrast to yesterday's bloodbath in the markets. Today, we were actually green all across the board. Now, that all started with some fairly positive sessions across Europe in the overnight session, Europe ending up around 0.5%, and the Nikkei from Japan as well, ending up about 2%. That bullishness carried into US markets with a nice gap up open this morning, and then was followed through midway through the morning when we had Scott Bessent talk at a JP Morgan conference in which he said that he did expect a de-escalation in the US-China tariff fight in the very near future. Now, of course, we know that the China deal has been the largest elephant in the room, largely since all of this tariff stuff started roughly 2 months ago at this point. And I was saying many times on the channel since then that now that the fears are pretty much into the market, we know that fear and greed index was at extreme lows. The consumer sentiment surveys were coming in also at extreme levels of fear and uncertainty, and that any positive news in relation to the tariffs would be well received by the markets. We had a proof of that roughly 2 weeks ago when Trump paused the tariffs for 90 days in terms of reciprocals, and the markets had one of their best days in the history of all market conditions. Now, today, we had another positive piece of news to start it all off when Bessent called the sky-high tariff between Washington and Beijing unsustainable and said that they did eventually want to make a deal. That was very clear, of course, but now that it has been verbalized by Scott Bessent, well, it makes the markets feel a bit at ease, and it did add to the upside pressure today. Bessent insisted that despite the U.S. ratcheting up on tariffs, that the goal of Trump's policy wasn't necessarily to decouple from them, but they were just looking for the best terms in terms of a deal, right? So that news definitely helped to bring up the markets, not looking to essentially maintain the status quo of very high tariffs between the two nations altogether. And that led the markets to end at a very nice close, the SPY up 2.6 and the Qs up 2.63. Now, just after the close, about 30 minutes ago, we did get an additional piece of news, and you will see that these indexes are up another 1.5% in the after hours. This time, President Trump himself confirming what Scott Bessent said earlier on in the day. Trump saying that, when interviewed by reporters, that China tariff won't be anywhere near 145%, which is why you're seeing such a nice surge in the after-hours session right now. The President Donald Trump told reporters at the White House the tariff on Chinese goods won't be anywhere near as high as 145%. The current tariff rate will come down substantially, but it won't be zero, he explained. Trump said he would not play hardball with China, which was one of the concerns as of recently, and said, "We are going to be very nice. They're going to be very nice." The president repeated that Beijing will ultimately have to make a deal on trade. That is obviously the case, right? And we're the ones that set the deal. We're going to be setting the deal, and it'll be a fair deal for everybody. I think it's a process that is going to go quickly. So those two pieces of news today, number one, from Scott Bessent during regular market hours, and from President Trump himself in the after hours, did help to push these markets a little bit higher. And although we've been noticing that equities have been weak, the dollar's been weak, right? A lot of money pouring into gold, and bonds have been weak as well. We do understand that the administration now does actually watch the markets, despite what they were saying roughly a month ago, that, in other words, they didn't care if the markets were going down. Now we definitely know that there is a Trump put in effect. Whenever these bond yields, especially the 10 and 20 year, the 20 year, whenever it gets close to 5%, the administration tends to relax its conversation on tariffs a little bit. Or the last time it happened, we actually got a 90-day pause. 10-year in a similar fashion. As soon as we get close to that 4.5% range, we know there is some sort of a Trump put in play where he tends to adopt a more friendly tone in his interviews when asked about these tariffs overall. So if you might remember yesterday's video, guys, overall, the headline of the video was, "Money is leaving the USA markets. Should you follow?" And if you watch the video, the conclusion was, no, you should probably not follow. The end of US exceptionalism, which has been something that the media has been quoting now for a month and a half, guys, is probably, if anything, going to take a very long time if it does materialize at all. We know that China is the rising superpower. Nobody is questioning that. But from one morning to the next, being able to do business without the United States in the grand scheme of world trade is probably out of the question, right? There's a lot of multinational corporations, globalized trade, and a lot of monopolies and companies in the United States that just have very wide moats, very large competitive advantages, and that are really intertwined in the global aspect of all markets. So if there ever is an end to American exceptionalism, it probably won't be right now. And the plan, as I've been saying on the channel, has been very simple over the last 2 months through this majoritively fear and sentiment driven sell-off with possible good or rather bad economic repercussions from the tariffs that we all know, presented them on the channel, right? There can be real damage as a result of these tariffs. But the plan in terms of our portfolios has always been very simple, and I've maintained the same consistency throughout this entire drop. Rather than trying to predict where the markets are going to go, we have two choices for our two portfolios. For the long-term portfolio, it's very simple. You should adopt the statistically best thing to do. With every paycheck, you put 10 to 15% of those paychecks into the market. When we are facing a correction, you should probably be putting a little bit more because you want to be buying those dips, but you should be DCAing into high-quality ETFs or individual high-quality companies with wide moats with large competitive advantages at very attractive prices. That is the value investor model. Just follow Warren Buffett himself, right? Even though people say Warren Buffett's all in cash. Well, he's not all in cash, guys. He has 74% of his entire Berkshire portfolio still in the market. Has he been selling off certain things and keeping cash? Yes, and we can do the same. But the crux of the argument here is that you should stay in a majorative fashion invested in the markets at all times. That's for portfolio number one. For portfolio number two, quite simply, and the logic is also simple for the trading portfolio. Rather than trying to take directional bets in a market with so many moving parts and so many consequences on either side of the trade deals, the tariffs, the market sentiment, the VIX being very high, instead of trying to predict where the market is going to go with very heavy sized trades, well, I was cautioning that if you do want to take directional bets, keep them small and trade with a stop loss. Use very wide time frames, such as the weekly time frame, and play off of well-defined resistance and or support levels for the markets, and just follow the price action. Who's in control, measure the size of the bounces, etc. Everything I teach you guys, right? That's for directional bets. If you don't want to take directional bets, the easiest way to play these markets, in my humble opinion, has been selling options because the volatility has been so high. Take your favorite companies, sell options well below the market, and collect that very juicy premium. And that will not change, guys. I will maintain that focus all throughout the year, no matter where the markets go. Directional bets, very small. Also, selling premium into high volatility, which is what I like. And number three, just consistently dollar cost averaging into my long-term portfolios. That is it for a very long introduction, but I think it had to be said and reiterated. Now, in terms of today's video, we're going to do a few things together. Number one, we're going to be taking a look at some earnings that I have prepared for you guys. Of course, we're going to talk about Tesla because Tesla was the big one today, but we're also going to be taking a look at Lockheed Martin. I know there was a ton of companies reporting today, but I figured I should present you, well, the one that everybody's curious about. But when I was choosing number two, I wanted to go for one of the companies that I think we should be taking a look at right now because the valuation is good, the company's business model is solid, and it's a very legacy company. And I'm talking here about Lockheed Martin LMT. So first, I'll be doing a recap of the Tesla earnings because everybody must be patiently awaiting those. And then number two, we will dive into Lockheed Martin and determine whether or not that stock might be a decent buy or a trade opportunity. Thereafter, we will take a look at our major market indexes, see where we stand after the intraday move and the after hours move. And then, of course, right after our major indexes, get into our big tech names and do the exact same thing because they had very nice moves intraday and even better moves in the after hours with those comments on China from President Trump himself. And thereafter, at the end of the video, we will take a look at my portfolio because there was a lot of trades made today and a lot of trades that I'm keeping into the rest of the week. So I'll give you guys a very large update at the end of the video. So make sure you stick around to that. Without further ado, let's get right into it, shall we? So the SPY up 2.6, the Qs up 2.63 in regular trading hours. And you can see from this ETF list right here, most of your major sectors were additionally in the green. The heat map looks very different than it did yesterday. Everything yesterday was bright red, and today everything is very bright green, except for a few defense corporations that were plagued by their own respective earnings today. But very nice broad market rotation back into the markets overall, as those comments on China really helped dissuade some of the fears that were carrying into the markets from last week, right? Very volatile session, guys. That's why it's so difficult to predict, right? Is the volatility going to continue to the downside, or are we going to flush the levels and continue on the daily downtrend? we don't know on a day-to-day basis because comments such as the ones made today, they just change the course of market activity with the snap of a finger. And there you go. You get a 2-3% move to the upside, right? And even more in the after hours. It's a very headline-driven market. So we have to be mindful of that before assuming that we know the decisive direction further out than even a few days or a given week, which is why all swing trades should be done with a stop loss and not assuming that you can predict the direction from one day to the next when the market is such a headline-driven market overall. On the one-day relative, you can see that every market was in the green today, led by consumer cyclical and financials. Shout out to technology, also up 2.5. On the 1 week relative, we find a bit more balance after today's green. Half the market in the green, energy, real estate, financials, utilities, defensives, and basic materials. So the more defensive side of the market, whereas tech and consumer cyclicals and healthcare still remain somewhat crushed after the last 4 or 5 days of selling prior to today. So that's pretty much everything for your early stage rundown. Now, before we get into more technicals, let us dive into those juicy earnings. And we're going to start off with a big one, guys. We're just going to get right into Tesla right now. So Tesla, before their earnings today, was up 4.6%. Now, after hours, they're only up 4%. But I'm surprised right now that they are up at all because objectively speaking, and trust me, I will give this entire earnings presentation as a Tesla shareholder myself. I have been a Tesla shareholder, guys, since 2018. I made a lot of money on the stock. So trust me when I say I can look at this one objectively. I can give the pros, the cons, why I invest, why maybe you should or should not invest as well. So I'll try to do this in the most objective fashion at all. And as a Tesla shareholder, let me just tell you guys that the numbers were objectively not good. Now, we're going to get into the reasons why they weren't good, of course, before you object. But objectively speaking, these are not good numbers. They were actually quite bad. And we kind of got the hint of that from them missing deliveries by 13% just a month ago when they reported deliveries. But a lot of people were saying, well, that's because of the Model Y refresh. Trust me, guys, I know. And we're going to talk about all of that today in a sum of all parts analysis, right? So EPS missed by 34%. And the revenue missed by about 9%. Not surprising due to the fact that they did miss revenue. They did miss deliveries, right? So objectively speaking, the numbers were quite bad. But when we look into more numbers, you'll see that they were also quite bad, all things considered. Tesla reports 20% drop in auto revenue as the first quarter results miss the Wall Street estimates, as we just saw. So total revenue down 9%, automotive revenue down 20%. That looks something like this. Big drop off in automotive revenue. As a matter of fact, the biggest one that we've seen since the same quarter last year. Now, I know Q1 is relatively slow for Tesla. It always has been that case. However, this is abnormally a big slowdown, right? A very big slowdown. You have not only made $13 billion on only cars in roughly the last 3 years. So definitely, not a very good quarter for Tesla in terms of automotive revenues, but we're going to get into why. Tesla said one reason for the decline was the need to update lines at 4 vehicle factories to start making a refreshed version of its popular Model Y SUV. I covered that when we reviewed their delivery numbers as well. We know that Tesla was having a big refresh cycle, but there's more factors at play that we can't ignore as well. The company also pointed to lower average selling prices and sales incentives as a drag on revenue and profit. Obviously, when demand for the entire auto industry, not just Tesla, not EVs, but the entire industry has been bad for the last 2 years because of high interest rates, well, to stimulate demand, you need to offer incentives, such as lower rates on financing and dropping the price of your vehicles. Those two things do impact net margins. Speaking of net margins, net income plummeted 71% to only $409 million. This is the worst Tesla net margins that we've seen in a very long time. Overall, those are net margins of 4.8%, far worse than last quarter when they were already declining to about 9%. This is the worst margins that they've had since this same quarter in 2024 when they were 5.5%, but this time it's even a bit worse. Moving on further, the president's sweeping tariff plan has led to concerns that costs will increase for their parts and materials crucial to vehicles, crucial to electric vehicle production, including manufacturing equipment. So think robotics for their product lines, right? Their production line, automotive glass, printed circuit boards, and battery cells. The company refrained from promising growth this year and said it will revisit our 2025 guidance in our Q2 update. I was just listening to the earnings call, which is why this video is being uploaded a bit later. I had to listen to the call, and Elon did say, because we know that Elon is close to Donald Trump, of course. He did say in the earnings call two key things. Number one, his time at Doge will be significantly reduced by next month. And number two, he did say that although not an avid proponent of tariffs himself, he has voiced his concerns to the president about the impacts of tariffs. But at the end of the day, President Trump is going to follow his own plan and can have inputs from advisors such as Elon Musk. But at the end of the day, it was Trump's plan. That is what Elon said directly on the earnings call, not my opinion. Now, moving forward, you can see this graph right here where total automotive revenues, they were down, but services and other held up very well, as you can see from me highlighting 2.6 billion. Last quarter was 2.8. So services still a bright point. The brightest point for the company, though, has to be the energy generation and storage. This is a part of Tesla that's grown wildly in the last few years and has largely made up for a lot of the lost revenue that they had during this quarter for cars. Now, it has not entirely made up for it, but it's a very nice bump. We'll get into those numbers as well. Now, Tesla cautioned investors that uncertainty in the automotive and energy markets continues to increase as rapidly evolving trade policy adversely impacts the global supply chain and cost structure of Tesla and our peers, basically saying they are not immune to tariffs, despite what some people may think. The company said that this dynamic and changing political sentiment could have a meaningful impact on demand for its products. So once again, not immune to tariffs. Tesla has also faced widespread protests, as I'm sure you guys have seen in the last 2 months, as brand sentiment has come into question for a lot of investors and a lot of consumers alike. Moving on further, Tesla has been struggling to keep pace with lower cost competitors in China and is a laggard in the robotaxi market. They're referencing Waymo. I mean, it's true that Waymo has more actual rides, but Tesla will be ramping its robotaxi endeavor later on this year, as they did reassure investors that it does remain on track for a pilot launch in Austin by that point at this same time last year. Here's your net income figure. As you can see, it is very low, guys. The lowest that we've ever had since Q1 of 2021. Definitely not a good look. Tesla was on a very nice path, but as I said, the global car market slowdown has impacted them as well as a result of high interest rates. It's a combination of things, right? As they said, a combination of things. I've written them down all here. Slowing sales growth worldwide for all car makers, price cuts and incentives, the China price wars, right? Everybody knows about that. BYD, their main competitor, and the brand perception. It's a combined amount of all those factors together, right? And of course, you can include, the Model Y refresh, I assume too, okay? Operating income in the quarter slid 66%. The company cited an increase in expenses tied to AI projects as one factor in the decline of operating income. So spending a lot more money on Optimus, essentially, right? Now, moving on further, the company would have lost money on automotive sales without environmental regulatory credits during the quarter. This is a common criticism from people for Tesla, rather, that they can't make any money without the regulatory credits, right? Well, what do you want them to do, guys? I mean, that's the way that the credits work, right? If you're a company that has a positive environmental impact, you receive credits. If you are not, well, you have to pay credits or buy credits from somebody else. You know what I mean? Like, what are they supposed to do? Just not collect what the government is giving them? So it's like, like everybody can get these. If Ford wanted to get these, they can get these too. But unfortunately, they produce more ICE vehicles than EVs, right? You can't really blame them for something that the government is offering, right? Now, energy storage and generation revenue jumped 67%. The company said growth in AI infrastructure is creating an outsized opportunity for our energy storage products to stabilize the grid, shift energy when it is needed most, and provide additional power capacity. This is substantial growth in their energy business, and we will take a look at that very shortly. Now, lastly, Tesla uses foreign suppliers for its energy business. The company said increasing tariffs may cause market volatility and near-term impacts to supply and demand, reiterating that even their energy business can be subject to global trade tensions and suffer therefrom, right? So here's their slide deck overall, guys. Not going to spend too much time on this, only the numbers. You guys can read through this if you want, but what I did want to highlight here is the automotive revenues down 20%, energy storage and generation, fantastic. Not as good as last quarter, but still very, very, very solid numbers by Tesla, 67% year over year when measuring against Q1 of 2024. Total revenues were down 9, although expenses were up 9. As I said, that is down to price decreases, also incentives given to consumers to stimulate demand. But As we saw as well, the company said they spent more money on AI endeavors. So Tesla, unfortunately, not with positive operating leverage, revenues going down and expenses going up, squeezes margins. That's why we have net income attributable to shareholders down 71% overall. They did manage to squeeze out some free cash flow, though, $664 million worth, which is not very good in comparison with their historical norms of free cash flow. Everybody knows that, right? Tesla usually makes, between 1 and 3 billion of free cash flow per quarter. And unfortunately, this was on the weaker ends that we've not seen since 2022. But they have built a substantial cash pile in reserves, $37 billion. So they do have a lot of insulation, and money to spend if they do choose to do it, essentially, right? So the story of Tesla is one of two tales. It's a tale of short-term negatives that are affecting the brand right now, and then the long-term positives. And to use the words of Elon Musk himself that he said on 3 earnings calls at this point, yes, he does always say that Tesla can be larger than the 5 closest companies combined in terms of value of the company. But he is talking about the long term, right? Talking about the robotaxi vision, talking about the Optimus robotics, and just scaling robotics as a whole. And to use the words of Elon Musk to describe this stock to you, he himself has said, do not invest in Tesla if you do not believe in Tesla's long-term future positives and long-term future thesis, right? It is not a short-term company. Now you can look at it as an automotive company because that's where they generate a bulk of their revenues, right? But eventually, robotaxi is coming, Optimus is coming, the battery cells. Not only that, the energy storage business, Tesla services such as insurance. There are many long-term positives, but we cannot ignore what's been affecting the stock price right now. A quick recap of long-term positives. Solving FSD is indeed a multi-trillion-dollar robotaxi business, potentially, if they can scale it up. They have the most extensive charging network worldwide. This is true. One of the most advanced robotics divisions worldwide. This is also true. The AI supercomputer X Factor play in Dojo, plus integration with Optimus, of course, with that AI, solar and energy storage expansion, which has been phenomenal. From their shareholder deck, guys, you can clearly see the ramp that's happening here in energy storage, right? This is a significant ramp, not only in gigawatt hours down here, but also in gross profits, right? The one thing that's struggling, though, is their brand, their market share, essentially, right? How well can their products pierce into markets and continuously gain share? We can see a notable stall here in all markets. US, Canada has been stalling now for 3 years. Europe has been stalling as well, although had an uptick 2023, has been stalling or down. And China as well has roughly been stalling. So I would not say that the rate of adoption of Teslas is increasing by a substantial factor. We'll see what happens with the robotaxis, of course, yeah? And then the cost of goods sold efficiency is offsetting the price cuts somewhat, right? Where when they get efficiency of scale, essentially, they have one of the best production processes in the world, which allows them to get better deals with supplier and reduce the average cost of production for each vehicle sold. These are the long-term positives of the company. We already went over the short-term negatives, so that should paint you the full picture of where Tesla is right now. In terms of valuation, they're currently sitting at a forward EPS of $2.50. I revised this down after this quarter's earnings miss. At $2.35, they still sit at a very rich 96 forward price to earnings ratio and a very high 4.8 peg. Now, I already talked about the long-term positives, so please nobody reach out and say, well, it's not expensive considering they have trillion-dollar market opportunities. I know, but those are not here right now. And the purpose of modeling like this is to understand whether or not you're getting a good deal on those future opportunities right now. And objectively speaking, unless you have a more than 5 now at this time, more like a 10-year time horizon, it's very tough to justify this valuation. If you're in it for the short-term trade, the valuation does not make sense. If you're in it for the long-term thesis, then you can make some arguments that this valuation can potentially be somewhat fair. So that being said, Tesla right now is currently trading above about 4.5% in the after hours. Support remains put down here. Could be a nice entry opportunity for those of you looking to maybe swing trade some shares. Try and target the lows, and then we want to exit at the highs. For a long-term investor, the answer is very simple. Is Tesla cheap right now? You can make an argument yes or not, but would I be adding some Tesla shares here? Well, maybe if I did not have a position and I wanted to participate in the long-term positives, it's not terrible, but I would be also open to the fact that Tesla can possibly drop more this year if the United States were to go into an economic downturn, Tesla as a brand and as a stock will get pulled down, and you should be preparing for potential DCAs below 200 all the way down to the next support area of 150. That is everything for the Tesla analysis. Hopefully that was fair and, all encompassing of what the company is facing right now versus its long-term positives and my thoughts on the stock as a Tesla owner overall. Now, moving into earnings number 2, we're going to be covering Lockheed Martin. This one should be a little bit more quick, but Lockheed Martin, I like this one. We don't talk about it much on the channel, but it's a legacy defense company that's just been largely sideways now, guys, for 3 years. And when a company is sideways for 3 years, while it is consistently improving, a lot of its fundamentals, such as EPS, is going in the right direction and revenues are going in the right direction as well. We need to have a look to determine, is it a buy here, right? Now that we're coming into this beautiful 5-year trend line area of confluence, 200 weekly EMA, which is this green line right there, and a very nice massive support box, which you can derive all the way from the highs of 2019 into prior supports 2022, 2023. Is it a buying opportunity now that the company is down from its highs 25%? Well, let's have a look. Now, what they had on earnings this morning is a very nice beat. 15% beat on EPS and a 1% beat on revenue. Let's take a look at the article, shall we? Lockheed Martin's quarterly profit rises on resilient defense demand, looking very good. They reported a higher first quarter profit on Tuesday and reaffirmed its forecast for the year on the back of resilient demand for its missile systems and fighter jets. U.S. President Donald Trump's trade war has rattled markets and upset some allies. For example, Canada, which is hit by steep tariffs, has ordered a review of a $19 billion Canadian dollar contract of 88 Lockheed Martin F-35 jets, with Prime Minister Mark Carney saying the country relies too much on the U.S. for security. Well, I'm in Canada, and I can tell you guys, we don't have anybody that can make F-35s, so we will probably have to end up buying them. That is, if we want to have a modern Air Force, right? Moving on further. Still, defense, this is Lockheed Martin's moat, by the way, right? Not many people in the world manufacture the quality and advanced technology level that they have in their fighter jets. Not only that, but missiles as well. Still, defense contractors have benefited from a surge in demand for weapons against the backdrop of the war in Ukraine and conflicts in the Middle East. Legacy companies in the sector are also expected to get a potential boost from Donald Trump's review of military equipment export rules that he is seeking to ease those export rules, meaning he wants these companies, these military contractors, to export more weapons across the globe. Now, whether that's ethically a good thing or not, of course, that's up to you. But for the business itself, it's good in terms of business terms, right? Lockheed's aerospace business, which makes the F-35 fighter jet, posted a 3.1% rise in sales in the first quarter. The company's net income rose to $1.71 billion. That is 9.5% net income margins, which is at the historical average highs of the company. So it's not crazy high. It's not low at all. It's right there at the top end of what you would expect from such a very solid legacy company. And despite an uncertain environment, some experts believe a higher U.S. defense budget will aid revenues at contractors by improving backlogs on key programs. You know that President Donald Trump is very vocal about his military policies. He wants the U.S. to be number one and stay number one. As such, you would expect them to have a high level of budget, especially for military contracts for weapon systems, number one, and that does include Lockheed Martin. A few key statistics about those Lockheed Martin earnings. As you can see, we're checking the operating leverage, aeronautics revenue, rotary and mission revenue, and missiles revenue. They were all up year over year. Very good. No division did miss. Operating income was up 17%, while operating expenses were only up 3%. So positive operating leverage for the company overall, which gave them a very nice bump in net income. Taking a look at the revenue by geography to see if they're too exposed to the rest of the world. Not really, right? United States quarterly revenue is still front and center, really doing well. Europe revenue as well did well over the course of the quarter. Asia Pacific also not doing too bad. And the Middle East revenue pretty much staying on par with some of the lows of historical averages. So you can see they still make a bulk of the revenue in the US, which is why favorable Trump administration policies for them could be beneficial because they make most of that revenue in the US. Otherwise, Lockheed Martin revenue by product category, you can see that for the most part, there were no real categories that were falling off, right? Space revenue, decent. Missiles and fire control revenue, also very good, expanding from prior years, but in line with last quarter. Rotary and mission systems revenue, that was also in line with last few quarters. Not as high as some quarters in the past, but still nothing crazy bad to see there at all. And then aeronautics revenue, which is a big one for the company. That was 7.1. Sorry, you can't really see the number. It's 7.1, which is at the higher end of what they've been doing, at least for the last 2 years. So geographically, they're doing well. In terms of product category, they're doing well. Let's take a look at the valuation then, shall we? Decent free cash flow. Buybacks remain in the company as well. This is a very good company that buys back a lot of its shares, or at least has been doing so in the last 20 years. And they should continue on with that path with their free cash flow. Now, in terms of their forward price to earnings ratio at 460 right now, it's about a 17, which is fair for Lockheed Martin in the grand scheme of historical averages, considering they've grown revenue and EPS since the same time period in 22 while being the same price. Gives them a forward peg at 460 of 1.78. The peg might not be the best because they're making under 10% EPS growth per year, something that you should focus on more specifically when growth is not necessarily the case for the company anymore, is something like a more defensive or value-oriented measure, which would be the free cash flow yield. And at 6.2% on a forward basis, because they reiterated, they held up their guidance, forward guidance down here. No change in guidance, no change in EPS, and free cash flow as well, no change. So I'm going out on a limb here and saying, well, the free cash flow yield on a forward basis is 6.2%. That is very, very good. So all very fair valuations for this company. Don't take it from me, take it from Guru Focus, which uses a number of different metrics to evaluate whether or not a company is overvalued. I mean, they have like hundreds of different metrics they put all together. So rather than me building a model for you, just take these guys. They're one of the best in the game. And the valuation per them is modestly undervalued. They say a price target that should be around, or a fair value target that should be in the 500s. So I do think that there is a nice upside appreciation curve for LMT, not only because it's a very solid business, it also pays a very decent dividend as well, almost 3% dividend, and could be a very nice portion for a more defensive, no pun intended, because it's a defense company, right? But a more defensive aspect of your portfolio overall, more of a value-oriented name, but still has some very decent growth in terms of EPS, profit margins, just it's a wide moat business as well, which is something you should be looking for. Very decent free cash flow yield. And the technicals as well do support that, right? We're just into some sort of a monthly pullback phase for this company that almost stays perpetually in a monthly uptrend, right? Nice little pullback into support, into a 5-year plus trend line, into some longer term moving averages, the 50 EMA and the 200 weekly EMA as well. I've been having a lot of fun in my big portfolio writing short puts at these lows, but could be up for consideration for some shares for a long-term portfolio, but also maybe even a swing trade, right? Maybe some call debit spreads, something with a bit of time to try and go for that leg of expansion, bouncing out of these support levels down there. That's everything I had for you guys for Lockheed Martin. Hopefully you enjoyed those two company recaps. Now, let's get into some charts, shall we? So in terms of the SPY, we know we had a very good day today, but we also know we're having a very nice evening in the after hours. Fear and greed after a day like today is still at extreme fear of 24, but has been curling up since the lows 2 weeks ago of roughly a 4. Market momentum is still very weak. Stock price strength, net new highs and lows on the exchange, is also at extreme fear levels, but somewhat improving. And stock price breadth is also near lows, but also improving equally. We took a look at that a few times over the course of the past few weeks. Percentage of stocks now above their 20-day moving average, normalizing, no longer at fear lows. Percentage of stocks above their 50-day moving average, normalizing, but still relatively close to the bottoms of the last roughly 20 years of data that we do have on this chart right there. And percentage of stocks above their 200-day moving average, still close to historical lows of the last roughly 15 years or 20 years as far back as this chart does go. So is it still a good opportunity to buy and DCA in your long-term portfolios? Absolutely. But in terms of swing trades, you still have to be a little bit cautious because we have a little bit of divergence in our timeframes here. We know that on a weekly time frame, well, we know that the weekly bears are in full control. We recognize that there was a very nice bounce opportunity here. When you have a very nice bounce on a weekly, 618 bounce, you give the bulls a chance at resetting a higher low and then maybe going for a trend change. And as of yesterday, that trend change was still somewhat of a possibility. The daily lows were marginally fractured, but still largely intact as we kind of devolved into this very awkward and wide range right here. In the after hours, here's the price right now. One thing's for sure, if you break the highs of last Monday, you would be officially in a new daily uptrend. However, resistance does stay put 550 to 564. If you make your way into there though, excuse me, that would be a new weekly uptrend. And then you can say this first phase of monthly consolidation might just be over. This monthly candle closes next week. If we can protect these lows, nice doji formation, maybe we get a little bit of recapture before moving into a bit more volatility if the tariffs are maintained. So in other words, what I'm saying, guys, is follow the price action. If you're looking for longs from here, the stop should be down below here. The highs should be your target, those resistance highs. And if you're just looking to play the volatility, well, we're still looking to write put options in or around the fear lows, as now we know the conditions in the market have largely been, the uncertainty catalysts have somewhat been removed. And to regain these lows, you have to recreate that exact amount of fear. So I still love writing put options in this market. Moving on to the Qs right now, same analysis, right? It cut the lows, didn't close below the lows, but we were saying that the daily downtrend was somewhat likely. The bulls have a chance to save. Right now in the after hours, we are right at this yellow line right here. So keeping in mind divergence of timeframes, right? Weekly downtrend, keeping in mind the size of the bounce was very juicy, 618, 70% bounce, no problem. The bulls have a chance at trying to go for a weekly uptrend. Can they get it? Do we just devolve into some awkward, very wide range of accumulation and consolidation? Or do the bears just turn us over and keep moving on to the lows? Well, you don't know. So if you're trying to swing trade here, well, the entry could have been yesterday or today, rather. The stop loss goes below the lows. The take profit area is into resistance, of course, which is a very logical area. And if you're looking to write put premium under this market, you should still be targeting in or around those fear lows, as now the bulls are trying for it. They don't got it yet, right? And the weekly bulls are trying for it, but you do not know whether or not this time frame will actually follow through. So as we always do on this channel, guys, not in the business of predicting. We will take it one day at a time and use the best trading strategy that we can, playing things level to level, stop loss, take profit for some swing trades, right? If you're going for that bullish expansion, or selling puts under the market and benefiting from that volatility. Moving on to XLF financials right now. Here's where you stand in the after hours for them. Now, no new daily downtrend. It is a nice daily uptrend attempt, and we are possibly breaching above the highs of last Tuesday. If that is completed, you will have a nice continuation of a new daily uptrend. And even on the weekly charts, guys, break this on the weekly to the upside. Weekly downtrend, highs, higher lows, higher highs over the course of this week would be a confirmed new weekly uptrend. You would know that monthly consolidation for the XLF is over, and they would be recapturing at the end of the month a very crucial level that on the monthly, at least, we have not closed below. Now, I'm not the biggest fan of buying banks right now. I'm a bigger fan of writing puts under the market. Bank of America is not a bad deal by any metrics. It's a decent one to add to a long-term portfolio. If I'm looking to swing trade, guys, very simple, right? Stops go below the low, take profit is all the way up here, or sell puts down there. Same concept for JP Morgan as well, right? JP Morgan, same concept, right? You can have a tight stop loss, go for the expansion into resistance. Not a terrible trade. If I'm looking to sell puts, they have to be in or around those fear lows, as JP Morgan is just going for a little bit of monthly, well-deserved consolidation overall. So you have to analyze the names individually, but some names that are just not at good deal levels overall are like Visa and MasterCard. They have come down, but not nearly significantly enough where I can enter these with size, unless, of course, I'm looking to add them to a long-term portfolio. Moving on to XLV Healthcare right now. Healthcare, one of the weaker sectors out there. We know that they've been really struggling in this very wide range. Now, the clearest time frame of them all is the weekly. It is a weekly downtrend. Lower high is set, and the bounce, unfortunately, was somewhat weak in comparison to other sectors, such as the SPY, the Q, and the XLF. Only a 50% bounce, but that means it's a coin toss. Can they recapture and move into a weekly uptrend? Well, we're going to see that over the course of the day tomorrow and the follow through for the rest of the week. One thing's for sure, reacting nicely into our very wide support area, which are the levels from 2021 through 2023, 2 years of range accumulation. So it stands to argue it's a tough area to get through to the downside, reacting nicely from the 200 EMA. My favorite opportunity in all of healthcare, and I will die on this hill. We covered their earnings last week. UNH, guys, at these levels, great addition to a long-term portfolio if it's your type of company, or for a swing trade, the risk reward is looking very, very, very juicy right now. Your stop is all the way below here, and the reward is back up to the resistance highs. Very attractive risk reward profile on this fantastic company right now. Moving on to SMH, up about 2.17%. Not enough, though. SMH was one that clearly clearly set a daily downtrend. No secret there at all. Daily downtrend meant that the weekly bounce was finished. And when we measured the weekly bounce, because we knew we were in a weekly downtrend, you measure the size of the weekly bounce. 618, perfect. The bulls have a good chance of trying to set up for a higher low and going for a trend change, but they need to prove it to us, right? How do you do that? Well, you need to get the daily uptrend back, right? Lose it. Now we need to gain it back again, and it all starts on the hourly time frame, which we have recaptured the last 2 days. If they maintain that, they can get a very nice bounce, change the trend, break these highs, perfect. Then you do end up in a weekly uptrend, but a lot of price action remaining before we can make that decision. Overhead resistance 232 down to 213. How do I like playing this sector? You guys guessed it. You guys guessed it, right? Swing trade, stops go below the low. You're targeting the range highs. Swing trade, right? Now, selling puts, very simple. Favorite companies below their respective lows. Looking at, a lot that we usually look at on the channel, but special shout out to Micron. Micron, great opportunity to sell some put options. ASML, nice little swing trade opportunity, stops below the lows, and you're targeting these range highs right there. Decent risk to reward. And TSM, NVIDIA, we'll look at them later, right? But same concept, sell puts below the lows, etc., 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 right? Moving on to IWM Russell. The Russell also not looking too terrible over the course of the day today, but the Russell is trapped between overhead resistance, 200 down to 188. It's a big zone, guys. Big support, big resistance for a year and a half, and big support. It's a very big level overall. And the size of the bounce on the Russell was not the most convincing bounce, yeah? Weekly downtrend so far, to the highs of there. It was about between 50 and 38.2, depending whether you measure tails or bodies. Either or, you have to know it's one of the weaker bounces in the market right now. But the bulls still do have a chance, right? They have a chance at setting the higher lows and going for the trend change, which arguably would be a break of the 90-day tariff day. We'll see if they can do that. If they can break above into here by the next few days, new daily uptrend is currently in motion. And you might even go for a new weekly uptrend, put some end to this monthly consolidation, give the bulls a chance to go on a very long road of recovery process. You guys know this best. It takes a long time, guys, to change monthly uptrends. So don't get ahead of yourselves. But if the Russell is something you want to invest in, I'm not doing it right now, but if you want to nibble at it, try your hand at it, no problem at all. You guys know the rules. And moving on to the Dow Jones. Dow Jones up 2.66% overall. Not terrible. Right? I forgot to give you guys the after hours levels, but they're not that much further, right? SMH is like here. IWM 190 is like up here. So we'll see. Tomorrow we'll have more data. Can they close those candles, right? Dow Jones 2.66% to the upside. The daily downtrend was clear as day here, right? Low, high, equal high, lower low in the close, daily downtrend. We'll see if the bulls have it in them. Can they fully engulf or at least give us a very nice size bounce to get the daily uptrend back? We will see. Resistance stays put at 41.3 down to 40,500 overall. We know who controls this, the weekly bears. But with such a very nice size bounce on the weekly, you can tell, right? This inter-time frame analysis is key. If you guys master this, you'll become much better traders. Yeah, 618 bounce is very good, right? Looking for the higher low. The bulls have a good chance. Now possibly looking for it. But, now that you know that the daily lows are possibly in because the hourly is now in an uptrend, well, see the size of the bounce. Get a good bounce here, reset. Okay, right? If you get a very nice bounce, higher lows, then you play it. You play it here for the entry, then you go for the weekly trend change confirmation attempt and blast off, right? Watch that a few times if you have to, right? It all starts on the hourly, right? Into the daily and the weekly overall. Top down, it starts on the weekly, right? Who's in control? Nice size bounce. You're looking for a higher low. How do you know the daily higher low is set? Well, when they get the flush, wait for the hourly to reverse. When the hourly reverses, the daily upswing is in motion. Can they get a good size move? If they do get a good size move, you might want to play this higher low, yeah, for the possible trend change, which leads into a weekly possible trend change. Just an idea, just saying, yeah. And that's pretty much it for our major sector analysis. Hopefully you enjoyed that. The VIX right now down 9.61, still somewhat elevated overall until you really get a breakdown below 25. I wouldn't say the volatility is necessarily over. It's been relatively sticky as we continuously move through these tariff headlines and tons of other headline risk in the markets right now. Quick reminder, I say this every single week for the last few weeks, right? In a very volatile market where macro is at question, you can have periods where the VIX stays sticky. You saw that in 2020. You saw that in 2022. You saw that in 2018 when we went through tariff episode number 1. And then you also saw it in the flash crash 2011 and the GFC in 2008. This is also an environment where volatility can stay sticky until the market gets a better picture of what is going to happen with tariffs. Will they be coming off? Will they be negotiated down? What will be the final effective rate? What will be the impact on the economy? With all these things that are uncertain, right? Any bad piece of data is going to spike the VIX, right? So don't be surprised if the VIX stays stickier than not. The dollar recovering a little bit today, but I have this on the chart, yeah? We broke a big level, a 3-year level to be exact, 2-year level, yeah? 102 down in 100. Is this going to happen? I don't know. It looks like it, right? Usually when you get a break of support, the logical move is a retest and then drop. But, you know, if there are external powers at play, like a Treasury intervention or a Fed intervention or a Trump relaxing of tariff policy, well, maybe people will flow back into the dollar, right? So technicals are one thing, but technicals without context, you're kind of missing half the picture, right? So we'll keep an eye on it. Nice early stage recovery for the dollar, and the same thing can be said about bonds. Yields coming down today, right? Now, will yields continue rocketing to the upside? Well, maybe if there's more uncertainty, right? And the bond market continues to be skittish, people wind down their bets. Nobody wants to invest in the US long term without certainty provisions from either the Fed or Donald Trump. Very normal, right? Which is why I say you can look at the technicals all day, right? But if you're missing the macro, you're missing half the picture. 20-year yields the exact same. They're at relative highs. We know there's a Trump put in play because every time they get close to 5, something happens to where we get some easing of pressures out of the administration in terms of their commentary towards reporters and etc. Right? So they're still very high. We'll keep a close eye on this day by day, but relaxing off of that most recent 2-day move again, which has alleviated some pressure in the bond market. Still at relative lows on the TLT, up 0.56 today, 1% in the after hours. We will see. Are those the fear lows for bonds? There's definitely a Trump put play in here. I'm a big fan of buying these TLTs if you want to take on that risk, right? This is a bluff call, right? If you want to take that risk, no problem. It'll be a trade that will pay off depending on your time frame, right? Maybe not the next 1-2 weeks, maybe not the next 1-2 months, but I think if your time frame is in years, such as 1 to 2 years, you should have a pretty good chance of making money on a long side bet on the TLTs. And that's everything for your bonds, dollar, etc. Moving on to gold. Well, it stands to argue when the uncertainty is down because of commentary such as this and commentary such as this early morning. Well, then people tend to hedge their bets on gold, you know? And as I was saying, guys, all-time high rallies on gold. I mean, this is one of the biggest rallies on gold 2 weeks since the 1980s, guys. You got to be careful on this, right? I know when you see the media headlines and everybody's fearful, dump the US dollar, everybody into gold, dump bonds, dump equities, dump everything and go into gold. Maybe you might want to think, am I possibly late here? Am I possibly late here? When this gold rally has been one of the best it's ever seen since March, right? While the markets were selling off, well, maybe you possibly don't want to heavily position 20% in 2 months on gold at the top of a move. Just maybe, right? If you have it for a long-term portfolio, it's fine. But if you're swing trading this, guys, I mean, like, at the end of the day, like what are we doing here? Buying daily overbought conditions, right? Buying 4-hour RSI at 90? Like, what are we doing here, right? Hourly overbought conditions? Come on, right? You have to use a little bit of logic here. If you do want to play it on a pullback, no problem at all, but just wait for a clearly defined level. Wait for a pullback to the 12 EMA, and then wait for an hourly uptrend recapture. You get the hourly uptrend, great. Entry goes here, tight stop goes there, or less tight stop goes down there, because then you're playing the next daily leg higher instead of just buying here and crossing your fingers and praying that that's not the top and you're not exit liquidity for Wall Street, right? So that being said, that's the move on gold. If it does pull back further, weekly candle, pay special attention. The weekly closes like this. What do you think is going to happen, right? Possibly due for a retest of the 12 EMA. We'll watch it closely and cover it every single day, but it does look like after a few weeks of being at RSI 80 on gold, which is not Palantir, maybe it's time for a bit of a healthy pullback in the context of a weekly uptrend. Pullbacks are always normal. Gold does it all of the time. Now, moving on to Bitcoin. Bitcoin also up 5.9%. Very good day for Bitcoin overall. Following its day yesterday, inverse head and shoulders pattern did play through, and now we smashed the resistance area, guys. big candle. To get through a big zone, usually you need a big candle. The bulls did a good job of staying tight, 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 right up against it. Any positive news? There's your big candle, not only on the daily, but the weekly as well. Big weekly level overall, guys. You're looking for the new weekly uptrend momentum shift. That's big, because then that means your monthly higher lows are set. You might be looking for some expansion in Bitcoin. And when you measure against BTC versus gold, which is what I was bringing up yesterday, maybe it's time. Maybe it's time, right? Nice trend line. This is 2 years of trend line. Down, 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 down. Gold outperforming. Bitcoin, maybe Bitcoin's time to shine as a lagging play to gold, playing off of its currency status. Because the US dollar is weak, Bitcoin can be a bit stronger, playing as a somewhat of a hedge to normal markets. It's carrying the rest of crypto up, that's for sure, right? But maybe acting as some form of a risk on parameter for the markets as well after being sidelined for a very long time. I don't know, but one thing's for sure. Upon a retest, you're looking for a higher low. Anything above 83.5 is looking for a higher low for possible further trend continuation. If I'm looking to buy this, well, might be just be looking for that higher low. Stop goes below there, and then you're targeting the upside expansion, which should be 100K. Not looking too bad for some follow through. I had fun buying some Bitcoin in these lower levels, and I'm glad that I did. Now we are pushing higher just off that fact. Not very heavy, guys. They were just DCA, long-term DCAs, right? For my long-term portfolio spot position in Bitcoin, which I maintain. Moving on to our big tech names now, shall we? Now, for the big tech names, I will do them with the after hours move, and I will draw a little line. You can see the post market is right there. I'll draw a little line to where we are, and you'll see that most of these after hours moves, although they haven't broken levels, they are fairly nice. Apple, we were saying, daily uptrend. Higher lows are probably set right now, and to support 196 down to 187. Opening up here tomorrow morning is good, but not a confirmation of a new leg higher. That will be a break above the highs of last Monday and into resistance 222 down to roughly 210 on Apple. Not looking too bad. You take out that level. Another thing has changed. Weekly downtrend, very nice bounce, 78% bounce. Higher lows are now set. Now you're looking for the weekly trend change on Apple. If you get that, it means your monthly consolidation is over. And maybe Apple can try and recuperate this monthly uptrend sometime down the line. One thing's for sure, when you lose the monthlies, it takes a very, very long time to get them back. So I wouldn't have utmost FOMO in Apple right now. On any pullbacks, though, could be interesting for a bit of a swing trade. Stop loss goes below there. Take profit goes in the higher end there. Or on any pullbacks, we'll be looking to sell puts at the lower end of the market down there. Not looking bad. AMD right now up 2.61. Here is where AMD is roughly in the after hours. AMD, same concept as Apple, right? However, daily downtrend, but all of them have decent sized bounces when you measure on weekly time frames. Okay bounce, looking for the higher low on the weekly, looking for the trend change. That would be a break above 96.9. So still a lot of work to do, even though the after hours move right now is pretty nice. It's not enough. Need to have a nice engulfing move and either engulf fully or at least two-step recover the trend. If you want to position right now, very simple. Tight stop loss goes below there. Wide stop loss goes below here. You are targeting the weekly highs, which would be exactly around there, $98. So decent little risk-reward trade on AMD if you are swing trading. If you're looking to sell options, very simply, profit from the volatility by selling options below or at or around the fear lows. If you agree with an AMD's long-term thesis, it being a very cheap company right now with decent upside potential as part of the AI trade. But the bears are still in control until we turn these timeframes around. Moving on to Amazon. Amazon, same concept, up to 179 in the after hours, right about there. So, top-down analysis. Who controls this time? Now, the bears are still in control of this weekly time frame. However, we have a nice weekly bounce, 618 bounce overall. Now, looking for a higher low, which they barely maintained. And now possibly looking for, if they crack the highs of the tariffs, of course, the tariff pause, that is, you'd be looking for a weekly uptrend. Got to get through a few levels first, though, guys. Got to get through this resistance, 191 to 179 overall. Amazon has earnings in next week, right? Next Thursday of the earnings. So be curious to see. But Amazon, phenomenal company. If you're looking for a swing trade, very simple. Stop loss goes below this low. If you're looking for the weekly trend change attempt, stop goes below this low, targeting the highs. So roughly, it's not quite a 2-to-1, but it's okay R&R right now. And if you're looking for selling put options, the analysis is the same. Try to get as low as possible below the fear lows into this massive area of support for Amazon stock, which is 173 down to 144. I know it's wide, but it's all the guys from 2021 overall. And Amazon right now, even at 173, valuation is okay, about a 28 forward price to earnings at about a 1.4 peg. Very decent valuation for Amazon for a company, such a solid company, guys. Still off its all-time highs by 26%. For a long-term portfolio, easy buy in my opinion. Well, not financial advice, but easy buy for me. I've been buying a lot of Amazon shares, trust me, yeah? So that being said, don't be disappointed. Oh, I didn't get the lows. What are you going to do? Not buy it here just because you missed the lows? You know, you have to have a DCA approach, right? Buy a little there, comes back down, buy a little here, buy a little here. Every paycheck, if you're looking to build a position on Amazon, that's how you should be approaching things rather than, okay, I'm going to try to time the bottom with $10,000 and hopefully I'm right. Yeah, come on, right? Moving on to Google right now. Google up 2.7% and another 2 in the after hours. They are sitting right about here in the after hours, right? So no level change right now, absolutely. Taking a look at who's in control. Obviously, the weekly bears are still in control of this chart, but we've been talking about this very nice bounce. This was a nice 618 bounce on Google. Gives the bulls a chance to set up for a higher low into support, coincidentally, 149 to 135, and possibly move in for a weekly trend change, which would be a break above last week's highs, 163. Got to do a few things first, though. Since you lost the daily uptrend, you got to get it back. That means either engulf the move or two-step recovery process for Google. If you want to be an aggressive bull, the entry would go here, the short-term stop would go down below there, and the take profit would be the highs of this weekly candle, TP number 1, or TP number 2, all the way up there for the weekly expansion. Reminder though, resistance 173 to 163. Google, fantastic valuation overall, nothing bad to say. I know they have their problems, but the valuation cannot be ignored. If it's a company you like in your long-term portfolio, I think it's a no-brainer. Moving on to Meta right now. Meta up 3.22 in regular trading and up another 3.8% in the after hours, right about there. So moving on in, top-down analysis, very simple. Weekly downtrend is clear as day. They had a very nice bounce after the tariff pause, 618 bounce. Now, Meta gave back the entire move. The bulls have a chance. This is a double bottom right now. They have a chance, right? Not the best chance probabilities-wise, but if the rest of the market keeps rallying, well, Meta will probably get carried up there as well, right? So keep in mind, we're into resistance right now, 531 down to 455. Great opportunity to sell some puts under the market if Meta is something that you like. And overhead resistance, 600 down to roughly 555. Pay special attention to, can they get the trend change in motion with a very decent size bounce? If that's the case, if they can get it, you know the weekly lows are set and you might be looking to push a little bit higher. Moving on to Microsoft. Microsoft up 2.14% in regular hours and another 1.82 in the after hours, putting them right about there. Microsoft, top-down analysis, same concept, right? Weekly downtrend, clear as day. 100% engulfing move gives the bulls the best chance of setting a higher low, going for the trend change, reacting nicely into support right now, which is 378 down to 365, which is these guys from the October sell-off of 2023. Not looking too bad. Valuation right now is fairly attractive for Microsoft. It never gets really cheap because it's such a consistent company. What do I mean by consistency? Well, I mean, look at their EPS and revenue. It's just steady, stable, up and to the right, great margins, great free cash flow, fantastic balance sheet, everything you're looking for in a high-quality company. Daily downtrend is prevalent. Now we're looking for the bulls. Can they either engulf or two-step recovery for the new daily uptrend? Entry for a swing trade is live right now or today. You're looking for, why is it live? Because you recapture the hourly uptrend, yeah? As soon as you see that, the entry for a swing trade should be live. Stops go below the low, you're targeting the most recent highs, or a wider stop loss week-to-week basis would be entry goes here, stop goes below the low, and you're targeting the weekly swing trade, yeah? So keep that in mind for Microsoft. Moving on to Netflix right now. Netflix, what a killer day on Netflix. 5.31 and another 1.22 in the after hours. They are right about there. Today, almost new all-time highs on Netflix. We know that Netflix has been part of team defensive stocks. It's consumer defensive stock now, apparently, right? Well, at least that's how people have been treating it. Daily uptrend, clear as day, right? The weekly, they did lose it. Now this is a more than 100% engulfing move. So it stands to argue, if you get some daily consolidation here, cannot break above these all-time highs. If you get some daily consolidation, looking for a higher low, anything above 894, looking for a daily higher low for further trend continuation. Support stays put down here, 972 to 950. And even if you lose this and go into daily downtrend, the weekly bulls, guys, look at this. So much space, looking for a weekly higher low for possible further weekly trend continuation as the stock moves on throughout the year. We covered their earnings yesterday, guys. Fantastic earnings. Fantastic earnings. It's just the stock is a little bit expensive objectively. If I didn't have a position on Netflix and I wanted one, I'm probably going to start one, right? I'm not going to wait for it to come down to 700 because that may not happen. But I would be open-minded to the fact that whatever I start here may require some dollar cost averaging if Netflix does go into a bit of monthly consolidation, if valuation is a bit rich and the stock just does not move higher, right? That happens all the time for these companies. Like Microsoft goes into extended periods of consolidation, even though it might not look like it. It does it often too. Costco, even though it's high right now, Costco does it as well. Sideways for 4 or 5 months, another period of sideways. So don't only think it's just going to skyrocket, right? You can get consolidation. So just keep that in mind. Moving on to NVIDIA right now. NVIDIA up 2% in the normal regular trading session, another 3 in the after hours, 102 where it is right now. Top-down analysis, who's in control? Weekly bears are in control, obviously, of this chart. That being said, very nice bounce on NVIDIA overall. That was a almost 75% bounce, very good, into resistance above. Resistance stays put, 115, down roughly 105, right? All these guys, resistance again. So what are the bulls trying to go for here? They're trying to go for the weekly trend change. Can they get it? I don't know. We'll see. First things first, though, got to recapture this daily downtrend. So either engulf or two-step recovery process. Entry for a swing trade is live. Tight stop goes below there. You would be targeting the range highs, right? Roughly a 2-to-1 trade, especially if they open the way they do today, right? Very easy trade. Very easy swing trade. Now, a wider swing trade would be going for, the thesis would be a weekly trend change. Nice bounce, higher lows, and go for it. Entry is here. The stop loss would go below there, and the take profit would go either here, TP1, or TP2 number there. Number there, I guess, guys. Yeah, valuation is relatively cheap at $100 as well. We've been over it a few times and also covered the problems that NVIDIA is facing right now, such as the tapering back of revenue growth and tapering back of EPS growth into the future. Moving on to Tesla right now. We did Tesla earnings, but I mean, we can recapture as well. In the after hours, 249, not breaking any big levels, right? Big resistance above 303 to 262 and below support 221 to 188. If it comes down, short opportunity, guys, for some short puts. If you want to take a long, just understand, guys, who's in control of this chart here right now, yeah? Tesla, big weekly downtrend, sideways consolidation, accumulation, you can argue, above the range of support. So if you're taking a swing trade, well, the stops need to go below there, and the take profit need to be at the high end of that range overall. If you're a long-term investor, we covered it already in the earnings. You know, just focus on the short-term negatives versus the long-term positives, and you should have your answer. Moving on to Palantir. Palantir up 3.51 in normal hours, another 3 3/4 in the post-market, which brings them right about there. So almost new weekly highs on Palantir, right? Not 52-week highs, but almost new weekly highs. Palantir looking very good. Going for the daily uptrend shift in the stock. That would be a breaking close above $98 if they get that tomorrow. New daily uptrend is officially formed on Palantir. If they don't pay attention to these guys, 89.41. Lose that to the downside, you are into a daily downtrend and only into a bit of weekly consolidation. This looks like Netflix, right? Weekly downtrend, excuse me. Nice engulfing move. The bulls have maximum chances of resetting into a new weekly uptrend. And the support below is currently 84 to 77. An easy way to play this on volatile red days is selling puts below the market. Palantir still remains expensive, but still one of my favorite companies to look out for in the next 3, 4, 5 years. I don't know what that translates into share price for them because they are quite expensive right now. But I think the company's fundamentals will be growing well. Whether or not they grow into this valuation is anybody's guess, but not looking too bad, right? On a SOFI right now, 5.4 in the normal hours, another 4.44 in the after hours, looking pretty good right now, right about there on SOFI. So same analysis, top down, weekly downtrend, size of the bounce, fairly okay, right? 55% bounce overall. Gives the bulls a chance of doing what they're trying to do right now, which is a weekly uptrend shift. Breaking close above this, SOFI might be the first one on this list that sets a new weekly uptrend officially with these lows being set in motion, yeah? Looking very good. They've accumulated at this range, going for the breakout, 1177 right now. Watch out for it. 200 weekly daily EMA, is at $12 roughly. And the next line of support, well, if you're entering a swing trade, very simple. Stop loss goes below these lows, and your target is the take profits up here, the next zone of resistance, as you try and go for that weekly leg of expansion, targeting the most recent weekly highs. I like SOFI down here. It's relatively cheap. Talked about it many times on the channel. And the best way to play this one, maybe just writing some puts under the market and possibly accumulating some shares as we have been in the last few weeks. Moving on to Uber. Uber up 2% on their own day, and in the after hours, another 1.33. That's not where Uber is. Uber is about 75 right now, which is the top end of the move. We were conveying the fact that this was a very nice daily uptrend maintenance range right now, backing into support 73 down to 68. Not looking too bad there at all. And looking to push higher. If they do break above on that daily range breakout, you're looking for 77 up to 80 bucks, the next big area of resistance at roughly 75. It's not a bad deal, guys. It's like a one peg on a forward basis and a 5% free cash flow yield. Uber's looking very good, not going to lie. Weekly downtrend, nice engulfing move, looking for the weekly higher lows and the expansion. If they get it, that's a new weekly uptrend, and your target is indeed those all-time highs. I've had a lot of fun playing Uber and accumulating some shares in these lower ranges. Now it might just be time for it to break out. And lastly, TSM up 2.39 in the normal hours, another 2.38 in the afters. That would be right about there. So top down stay the same. Are you guys getting the point right now? Weekly downtrend, decent size bounce. This size bounce on the weekly, 50% bounce. Gives the bulls a 50-50 chance. They had very good earnings as well. Looking for the weekly higher low into support. 147 down to 140 is that support range. Looking for the expansion, which would be a break above 159. Keep in mind that's into resistance though, 179 to about 155, that resistance range. So on the daily, not quite a loss of the daily uptrend, right? Equal lows, double bottom. Give me one or two things, either engulf or two-step recovery process. Then you got the daily uptrend. Then you also consequently have the weekly uptrend, which means your monthly lows are set. And maybe TSM will even be looking to claw back some of its losses over the next coming months. Fantastic company, one of my favorite semiconductor plays in the market. They are so cheap. And I've been also having a lot of fun adding to my long-term position at these lower levels this entire drop, and also playing short puts at the lower end of the fear levels. We've made a lot of money on those recently. That is everything for our stock market recap, guys. Hopefully you enjoyed that. Now, let's jump into some plays. So before I go through the actual portfolio, figure I should show you the ones that I closed that I had from last week and from yesterday that we closed today. Apple and Amazon were some from yesterday morning. Closed them today for a handsome profit. Google was one from last Thursday as well for a handsome profit closed today as well. Micron and Robinhood, both from last Thursday too, closed for a very nice profit, 70%. I show you guys on the spreadsheet because it's easy visually to kind of, just get an idea of what exactly went on in a very clear fashion. But I will show you the actual alerts too, right? So here's, in terms of the ones we closed today, we'll start off from the top roughly. So TQQQ was closed today for a profit pretty much, or rather yesterday, 5 cents out of it from, I think we got this one for 15 cents. So that was another like 66, 65, 70% profit. Thereafter, Apple was entered yesterday, closed it this morning. We got it for 46 cents, closed it for 15. We got a new trade this morning, Elf Beauty, which I'll show you in a little bit. Amazon also, short puts closed, taken yesterday, 34 cents. We closed them for 10 cents, another very decent profit there. Contracts move worthless. Robinhood, we got them 34 strikes last week for 16 cents. Closed them for 5 cents, another very decent profit, almost a lot of it realized today. We did a roll on the covered calls for Grab. You might remember I still have 200 Grab shares. My cost basis now on Grab is $4.22. I'm writing covered calls at $4.50 for next week. I picked up an extra 10-cent credit for next week, looking pretty good. So now we've built a little bit of a cushion between us and our call away price. So not looking too bad there. Google as well. It was a pre-earnings trade. They have earnings on Thursday. I'll figure I'll reset. We got into it last Thursday for 37 cents. Close it for 12 cents. So another like 70+% profit in just a few trading days. And Micron as well. Micron, 35 cents for the 60 puts that we had. We closed them for 10 cents today. So once again, another like 65, 70% profitable trade. All of them since Thursday. Close them today. I have the buying power back. Can play some earnings as well. And those are the ones that I did today overall in terms of just opening and closing trades. We have some new covered calls on Elf Beauty, as you can see, 35 cents. We got into those yesterday. I probably didn't show you those yesterday, guys. Overall, my mistake. I'll show them to you right now. Elf Beauty, as you can see right about here, new covered calls, 59 strike for the Friday, 35 cents. Assignment tracker, the average cost on Elf now from being assigned at 71. Can you guys imagine in the last 2 months, I've brought my cost basis from 71 down to 57 only by writing covered calls and writing short puts below the market in DCA attempts without ever getting assigned. So farming credit is a very real thing. I've dropped my cost basis by a whole $14 per share. That's massive on only 100 shares, right? So that was all the plays that I figured I should catch you guys up on today. Now let's take a look at the portfolio for what plays that I have into the rest of the week. All right, so we got a few things to recap here, guys. Now, these are earnings trades, okay? So the ones you'll see here, a lot of them are earnings trades. We took Boeing. You guys know my earnings strategy. 2 or 3 standard deviations away from the expected move. Boeing has a 5% expected move. These contracts are 15+% away. I got the 130s. I shouldn't have done 2. I was meant to close this one. Whichever one filled first, I was going to keep. I ended up with 2. We'll see what happens, but 2 or 3 standard deviations away and into support. That is my earnings strategy. I never recommend you guys play earnings. You guys have seen me lose a lot of money on earnings last year, right? It's a gamble I'm willing to take. So we'll see what happens. If I can make it through this earnings season well, last few ones have gone well for us, but last year you guys saw me hit with all the crazy ones. Nike, Starbucks, CRM, Pinduoduo, and there's a few more that I'm missing as well. I got hit with the craziest earnings moves last year. This year's been doing well so far, but these are earnings trades, yeah? Elf Beauty, I talked to you guys about it, opened a $47 put today as a DCA attempt. 21 cents was the low of the day pretty much, or the high of the day for the contracts. They're down 50% profitable, so an easy trade there. I replaced my premiums that I had in Google and Amazon for a $4,700 contract. So that's what I'm doing, guys. I closed Google and Amazon, or, Apple and Amazon for like 10 cents a pop. And where do I get that back? Elf Beauty for a fraction of the exposure. Now I have a ton of buying power for the rest of the week, yeah? So as you can see, Elf shares are maintained. We also have the Elf Beauty covered calls that I showed you guys. Enphase, short put attempt, earnings play, 16 cents, right? This was 26% away. We'll see what happens. Enphase right now in the after hours down 9. Should be able to close this trade for a nice profit come the open tomorrow. Grab, we went over the covered calls already. HIMS, another short put opportunity I have remaining for the week. $22 put. We'll see what happens. I got a lot of a wiggle room right there, and it is support. NVIDIA 87s, same concept. Took those last Thursday. You can see they're already moving profitable. This is the bear market strategy. Waiting for big red days and writing put options well below the market while still getting decent ROI. 0.25% to 0.5% per week. Restoration Hardware, those are my meme shares. I'll ride these into dusk or dawn, guys. I don't care. Rocket Mortgage last Thursday as well. Aggressive play from me. 11.7. It's an roughly a proxy trade for TLT. Roughly, I wrote aggressive short puts. 11.7. 28 cents on them. So over 2.5% on those contracts. They're moving well. We'll see if I get a sign. But I like Rocket Mortgage down there. It's into the whole support range, right? Not a bad trade at all. I wouldn't mind 100 shares. SOFI, we covered those already. I have 200 shares. My average cost, maybe I haven't updated you guys on my average cost because now I have 200 shares. But the SOFIs are, where are they? Got too many things. Here's SOFI. My break even right now on 200 shares is 12.33. So we're not that far from our break even, right? I'll wait to write covered calls, but it's been a very nice process of farming covered calls and a DCA, which actually got filled at $11. We got assigned at 11 last week, I believe, or the week prior. Moving on, SOXL, very aggressive contract. Showed it to you on Friday, 9. I'm looking for 100 shares. We got it for 60 cents. Crazy premium. I know. I want the shares. That's why I'm doing it, because I want the shares and ride them higher. I think semiconductors could have a bit of a rally. I'm looking to almost assign myself close while still getting a lot of premium and then riding the shares. TLT, I've had these for a while now. Tesla, 150 put. This was an earnings play. You could get 30 cents. 37% away. Of course, I'm going to play that one, guys. This will be worthless by tomorrow morning. And TSM, this is a little dividend. Don't mind that. I still have all my call debit spreads that I've been building the last few weeks, the leap on Amazon, and all the other thematic plays for some deals with China. So maybe these come alive tomorrow. Nike, UPS for logistics. These are all China proxies, yeah? Nike, UPS, logistics, right? Tariffs, logistics make sense. Apple, KWeb, TQQQ, Meta, because they were lagging behind the rest of the Mag 7. Micron, my favorite cheap semiconductor play right now. Leap call debit spread. I showed you that last Friday. NVO, just because it's just ridiculously cheap. And QQQ, this is a hedge trade for downside. Bear put debit spread. They're up right now, but it's a hedge, right? Against all of this. And then UNH, I took this one a bit early, I will admit. I took it right after earnings. It's for August, 490 versus 500. We're down 50%, but the problem is like, I took this the morning after earnings, yeah, here. And then since that point, we've dropped an additional, like 7-8%. So of course the spreads are down. I have until August for them to make it only back to here, right? So that's kind of what I'm going for. Not the crazy move, but I have like 4 months for them to make it all the way back up to there. We'll see what happens. If they stay down here for too long, I might add to that contract, lower the cost basis a little bit, and we'll see. One of my favorite bets out there. That is how the portfolio is doing. And I figured maybe I should update you for another of the portfolios while we still have time. I mean, the video is already long enough, but let me just do it real quick. So this is the small long-term portfolio that I'm building with you guys, right, live. And as you can see right here, the performance is not the best, right? In line with the market, we're down, year to date. When I started this one with you guys in March, we're down, I don't know, what, like 7% overall. Not too bad. The position sizes overall is also not terrible. We're down. We contributed a total to it. I'll just show you I have a little tracker here for it. In terms of the small long-term, we're on week number 6 right now. Total invested so far is $6,000. I DCA $300 every 2 weeks. This week's ads were Amazon, Google, Elf, Meta, Microsoft, and TSM. Yesterday, during peak fear sell-off, here are the buys. The amount of the buys, it's just $50, right? Here are the prices at which I bought them yesterday. Just a normal DCA as we continue building out this portfolio. The largest position still remains Amazon, followed by Meta, Google, Elf, Mercado Libre, AMD, AXP, TSM, Netflix, and Microsoft, of course. This is the small portfolio. I've explained a few reasons why I chose these stocks. They're either my favorite stocks or stocks in which I see good upside velocity in the short term, such as Elf and AMD. The other ones are just high quality companies with a concentrated fashion overall. So that is the status of the small long-term portfolio. If you want, I know I haven't updated you guys a lot, but it is week number 6. A couple weeks ago, week number 4, there was another investment of 300. Amazon, AXP, TSM, Meta, AMD, and Mercado Libre, $50 each. If you want to see the buys, there were the buys at that time. So those are 2 updates in once. This is like 2 weeks ago, yeah, April 7th. So of course the prices are not the same as they are today, but just letting you guys know that I'm steadily DCAing and updating the Discord whenever I do DCA. This is when we built the portfolio, and I'll be updating this one every 2 weeks as we average into it and build a decent portfolio, as anybody should be with every single paycheck. So that was a long video, guys. Hopefully you enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these every Monday through Friday after the close. And lastly, if you have any questions, always feel free to leave them down below. Anything you want, stocks, options, macro, anything in between, feel free. And lastly, if you guys want access to all of these trades in real time, especially the credit trades, because they do a lot of them, right? The wheel strategy, either bear market conservative or in a bull market, the normal wheel strategy that I show on the channel. All the trades, whether it's the wheels trades, the shares and calls or call debit spread trades, the long-term investment for my big portfolio or for the small portfolio. We also do gold futures trades right now as well. Small little day trading thing that I've included into the Discord to show people how I choose day trading setups. 1 hour, 2 hour, 3 hour, 4 hour, we're in the trade, and that's pretty much it. So many trades, so many different trades, whether you have a small account, medium account, large account. I definitely show a little bit of everything for everybody. So if you want access to all those trades, the link to the Discord is down below. I also do private morning live streams every morning, Monday through Friday, for 2 hours after the open, where I trade live and take all of your questions in real time on your stocks, your options, and your long-term portfolios. If you cannot be there, they are all recorded, and you can also ask me all of your questions in all of our chat rooms all throughout the day, and I'm very fast to answer. Private videos as well, advanced option strategies, and other portfolio building techniques that I do not really share that much on YouTube. Whether you have a small, medium, or large account, how much of that, if you're trading, should be for which strategy to get the most optimal growth while still managing your risk properly. People have been finding very good value. There's about 10, 11 videos in here at this point in time through various different things like technical analysis, option strategies, portfolio growth strategies, etc. And you also get access to all my watch lists, all these watch lists, all my technical analysis on any chart. Whenever you see support resistance, you just copy paste all my charts, all my watch lists. Very easy. It's 2 clicks of a button. And you also get access to all my annotations. Whenever I go through earnings, these annotations are on like 100+ different companies. I redo them once every quarter or whenever I analyze something new. So you get all that as an included bonus. If any of that interests you, the link is always down below in the video description. and I hope to see you in there soon. If not, I guess I'll see you back on the channel, guys. Pleasure as always. Take care. Get some rest tonight. I'll see you guys to do it all over again tomorrow after the close. Take care and peace.